He joins us now live from Frankfurt. Thomas, thank you so much for joining us. Overall, we're almost at the end of the summer. How would you position yourself as we get into, well, September, the beginning of schools? It's a new trading year.
Yeah, well, good morning. It's going to be a difficult period ahead short term for the next 6 to 8 weeks because we still have a few investment themes to digest. For example, the fiscal policies in Europe are to be sorted out. We need to know whether cutting programs are really going to be implemented. So it's a bit caution on equities short term, but longer term, as you mentioned before, the chances are that actually especially German stocks are going to be quite well into the next year and first half 2011 because we think there is secular trends to continue. For example, on the large export dependency on Germany, we expect still good news from emerging markets,
Thomas,
from German exports
in terms of what
and
you're
traditional
expecting
German sectors.
for the German market, I want to focus a little bit on that. Give me a couple of examples on, are you still expecting volatility on the DAX, but how much of a gain in the next 12 months?
Well, we have a range between 5,500 and 6,500 for the moment. I would expect starting next summer maybe we can surpass the 6,500 based on the traditional strengths of like German industrials, German automobiles, German machinery, because these traditional sectors are actually going to drive markets forward when demands from emerging markets actually persist, and that's what we expect for the next year. We expect key impulses from emerging markets.
Now, you're actually close to neutral and positive for emerging bonds and emerging equities. What kind of countries would you prefer?
Well, we prefer Asia ex-Japan, also maybe Asia ex-China, because there's quite a few countries that have a positive development and based on secular trends, and we also have South America like Brazil on the screen.
You say investors will pay a premium for stable growth. What kind of sectors do you see giving the most returns?
Well, we expect everything that has to do with emerging markets, and there's also the food and beverage sector, the industrial sector, but also household products, everything that profits from the global, secular, quite strong and stable growth of emerging markets will be on a premium because as we see volatility like in Southern Europe, you need to differentiate. We see volatility in the US still with the housing market having problems, the labor market having problems. So I think into 2011, everything that has stable growth, might also be slower growth, but it needs to be stable, and investors will pay a premium for that.
So, Thomas, you're positive on industrial, food and beverages, household products and tech, as you were just telling us. What about the big mining stocks? Because there's so much M&A surrounding them, they may be a good deal for investors wanting to come in and play a bit of a bargain.
Well, it's true. So mining stocks are somewhere caught in between because you need to differentiate between like copper and aluminum and between iron ore and everything else. So a differentiation strategy is what you need in the mining sector because we are one step ahead. So it's not that everything is going to have a good run in the mining sector. We prefer like copper and iron ore. So differentiation is key. The sector overall is going to be neutral.
Thomas, thank you so much. Thomas Tilse there.